Last week, I stopped by CP24 to talk about the Bank of Canada's interest rate hike, taking us to 4.75 on the overnight rate. I've already put out a video on my channel going over this most recent hike, but I thought you guys might find this interview interesting. This was done on the date that the interest rate went up, so I'm posting it a few days later. Also, coming up tomorrow, this Sunday, we have a very, very special episode of the Tom Storey Show. That is our podcast, our weekly podcast every single Sunday. It is our 1 year anniversary episode. So if you haven't already, make sure to check out the podcast as well. Here's the interview. I hope you enjoy it. And if you have any questions, let me know.
And for more on how today's decision will affect consumers and the overall housing market, we're joined now live by Tom Storey. He's a sales rep with Royal LePage Signature Realty. Tom, thanks so much for being here. Let's start with your reaction. Is this something that you were expecting? Because a lot of market experts were thinking the Bank of Canada might hold off until July for this.
Yeah, I wouldn't say I'm shocked, but I am surprised by today's news. I thought they would wait and maybe do this in July. I didn't expect it to happen in June, but the inflation numbers were up from what we thought they were going to be. And I don't really think, I understand that TIF and the entire Bank of Canada have a very, very difficult job because there are some people that are absolutely going to be impacted by this, and this is going to make their day-to-day situation much harder. But there's also a lot of people that are very excited by this because this is potentially going to help them get into the market in the future.
Yeah, it's definitely a tightrope balance there, although families, a lot of them have seen their monthly mortgage payments, if you've been on a variable rate, going more than $1,000 more per month. What's the correlation between increases in interest rates and the housing market? Tell us about the trends that you typically see.
It's the number one thing, right? We look at interest rates, we look at population growth, and we look at unemployment of the three pillars of the housing market. And even though today's announcement of a 0.25% increase, in terms of the actual financial aspect of it is minuscule, a lot of it's happening up here, right? Like psychologically, we're hearing this going, okay, Bank of Canada is trying to get inflation under control again, even though they've paused the last two rate increases. And that's going to change buyers' decisions. Now, what I will say is if you look at active buyers in today's market, I don't know too many active buyers that are taking variable rates. The most popular product we're seeing is that 3-year fixed rate, and a lot of people are locked in. So this may actually cause people to go out there in the next 2 weeks and try to buy what they want to buy. And if I'm a buyer, I might actually like today's news because I'm taking a fixed rate anyways. But on the other side of things, the people with variable rate mortgages are really, really feeling the pain. And the overall inflation numbers, part of it as well is housing costs. So even though they had to probably do this, this isn't going to help the inflation numbers either.
You know, we heard my colleague Paul Bagnell from BNN Bloomberg talking about the correlation in terms of more homes being sold, prices going up because the Bank of Canada held for a few months. So what do you expect is going to happen now into the summer, which tends to be a pretty busy time in the real estate industry?
Yeah, month over month from May, looking back to April, we actually saw new listings in the city of Toronto go up 33%. And we desperately needed this. We desperately needed more inventory. So that happening, and then you tack on this, and the fact that as we head into the summer, historically, it's a slower time in the market anyways. I don't think that you're going to see price increases continue because we saw 5 months in a row of price increases. They're probably going to cool off now into the summer. And then the big question mark is, how's the fall market going to react? Because a lot of people are saying that maybe we've already peaked so far in 2023 because this has, quote unquote, been the most normal year that we've seen in the last 4 years. And the summer is going to be very interesting to see what happens with inventory and what buyers do.
Yeah, the roller coaster continues with the housing market. Tom Storey with Royal LePage Signature Realty. Thanks so much for your time.
Thanks for having me.